Markets once again, they are at a record high, and yesterday particularly was a historic day for our markets. Sensex for the first time claimed 75,000 mark. Back when Modi government first came to power, we were at about 25,000. We are triple that figure now. That's a CAGR of 11.61%. I mean, what other market has performed this well, Aamar? And also the big question, when will we get to that 1 lakh figure? Can we get there in the next 5 years, sir?
Yeah, I would say that markets have really performed exceedingly well, and also what we see is that global macros, global market sentiments have also definitely aided to that. So it's been both the domestic growth as well as the global growth. So a double engine, which you can say, that has really helped our Indian markets outperform, and many of the sectors have really performed. And also what we're seeing is that recently we've seen sectors like metals performing exceedingly well. We've seen some of the banking space, PSU banking space performing exceedingly well. We've seen the defense space perform exceedingly well. However, we didn't see much of the performance coming from the FMCG space. But overall, if you look at the broad-based rally has been there. If you look at the stocks which are trading out there, 200-day moving average, that's close to almost 65-70%. So that tells that the broad structure of the market is very strong. And also the global sentiments, definitely we can't deny the fact that global sentiments, US markets, European, Japanese markets, they've all really helped. Apart from the Chinese markets, which had their own economic woes, where we are seeing some sort of, I would say, consolidation happening. So overall, if you ask me for the next 5 years, I would say Indian markets or India is definitely the place to be. But you have to understand that when you are into the markets from a long-term perspective, it's more like playing a 5-day match. That is a test match. You're not playing a T20 game. It's like you're running a marathon. You're not running a 100 meters race. So that perspective, investors and everyone needs to have, if you're looking at the market from a long-term perspective, because that's the way you can really create wealth. You identify stocks, or you even look at passive funds like ETFs, and you can invest on a SIP mode, wherein you get definitely far better returns as compared to FDs and other sort of fixed income instruments. And you beat the inflation also hands down. So the growth definitely is going to be there. Yeah, but we need to remember that it's never a straight line that goes up. You'll see corrections. It's like the snakes and ladders game, which we all used to play as kids, and even sometimes we play now as well. So the markets are also that way. So there will be corrections. There will be some unexpected event where the market tanks, but that's again the opportunity to buy. So whenever there is some major correction in the market, bloodbath is a very strong term, so I wouldn't want to use that. But whenever there is a major correction in the market, or some decent correction also, you should look at adding and holding from a long-term perspective. Definitely emerging a winner. The possibility, there's nothing called certainty, but the probability would be very high if you stay invested in India over the next 5 to 10 years.
Good morning, Aamar. Positive growth expectations from global markets is always good for Indian exports. Now, the Sensex itself, it took just 82 days in the most recent 5,000 point rally from 70,000 to 75,000. However, out of the top 30, 10 stocks, which are mostly in the FMCG and banking space, gave negative returns. Do you think this is the time to get into these stocks and for investors to reap maximum returns in the near and medium term?
See, if you look at these FMCG stocks, FMCG, I was just looking at them over the weekend very closely as to on the fundamental side as well as from a long-term perspective on the charts. So honestly, if you ask me, they really don't inspire much confidence. So it's more of a range play in most of the FMCG stocks. It's not that we are going to see some trend change immediately happening. So rather, I would suggest that we should stick to names which are strong and are technically on the long-term charts, which have a very positive momentum. But yes, if these stocks are to rally, then only we will see the index also rallying. So some sort of rally would happen, but we'll have to see whether FMCG really the structure changes for them on the fundamental side, because there the pickup or the demand has to really take off.
All right, and Amar, speaking of FMCG companies and at large, weather forecasting agency SkyMed Weather has also predicted a normal monsoon for India in 2024. I mean, that's not just a big positive for agri-related stocks or FMCG stocks at large, but India's growth story also, no? Because I mean, it has been the rural consumption that has been a big pain point for the markets, isn't it?
Yeah, see, that is a big, honestly, if you ask me, that's a very big question. And because ultimately the spread of or the distribution of wealth plays a very important role in the overall economy. So how that is really shaping up going forward, that's an area because in some areas we see a lot of wealth getting created. In some areas, there's still some concerns there in terms of the distribution of the wealth. That again is a concern area. So because we still need to understand that rural contributes significant in terms of the population stay which is there. So those aspects and FMCG is spread out there as well. So I think that's one of the key things which are actually playing out. So we'll have to watch out how this really transforms over the next 3 to 5 years. But if you ask me, FMCG currently, I wouldn't recommend the stocks in FMCG from a buying perspective. Yes, they haven't rallied, so the downside is definitely limited. So from that perspective, you can say that they are defensive in nature. If the markets do correct, they wouldn't correct that much. That is there, but overall, the trend is definitely missing in most of the FMCG stocks.
All right, and Amar, while we all have been focusing on what's going on at the two ends of the spectrum, the headliners, Sensex and Nifty, and the small and the mid caps, Nifty Next 50, which consists of the 50 companies that are next in line to be included in Nifty 50 index, that has been the best performing index of 2024. In fact, Nifty Next 50 just notched its best quarter since 2009 versus the larger Nifty 50 index. I mean, are these stocks to consider buying, Amar? Because they offer the best of both worlds, stability of larger companies and growth potential of mid and small size firms, sir.
Yeah, that's you've really put it very well, I would say. So if you look at Nifty Next 50, as you rightly said, the stock, this index has delivered phenomenal returns. And if you look at the yearly returns so far, that's almost approaching almost 20%. And if you look at Nifty, that's roughly around, I'm talking about this calendar year, that's around 4.5%. So that tells me that having a basket of such indices to invest in terms of ETFs, that's the way forward, because you have to understand that these are the stocks. Some of the stocks from the Nifty Next 50 would move into the Nifty, and some of the stocks in the Nifty 50 would actually move out. So that churning will definitely be there. But this, as a group, what you get is you get the top 100 stocks of India. So if India is to really grow the way we expect it to grow over the next 5 to 10 years, then the top 100 stocks have to perform. You have to understand one thing is that when you're looking at such large stocks, don't expect a multi-bagger sort of returns. For that, you've got your own picks in terms of small caps or mid caps, where the returns are significantly higher, but the risk is also high. Here it's more of you are definitely getting very good returns. Any return in excess of 14-16% annualized, if you can get from a long-term perspective, that's fabulous returns. Most of the mutual funds also don't really generate these sort of returns. So looking at passive funds, ETFs, and looking at Nifty Next 50, definitely the way to go. You rightly put it.
Aamar, mostly we look at spaces like banking and FMCG or even commodities as market drivers. Do you think with the expectations of a global manufacturing rebound, metals are the one that could lead the rally from here on, at least in the immediate term? Now look at yesterday, Hindustan Zinc jumped almost 18% on the BSE. In the last 5 days, almost 21%. Hindustan Copper has given returns of 254% in the last 1 year, jumped to 12.4%. Manganese ore, Steel Authority of India, all surged above 5% yesterday. Tata Steel, Hindalco, Vedanta were in the 1 to 3% surge. So do you think this can be the market driver, this space can be the market driver in the immediate term with the expectation of a manufacturing rebound globally?
See, I would say that one thing we definitely need to acknowledge is that the metals market moves as per China to a certain extent, to a very great extent, not a certain extent, to a very great extent, even today. So that is not likely to change in the near future. So we'll have to understand and live with that, because it's a Chinese demand for the base metals and the metals which has really led to this rally which we are seeing right now. And so having said that, India becoming a manufacturing base and growing significantly, still we are, in terms of, if you look at comparison with China, in many of the metal space, we are 1/10th, 1/20th, 1/30th of their capacity. So that tells me that we are still not price setters. We are price followers. Like in bullion, we are one of the major consumers in gold, but still we are price followers. So the same I would say with metals. But yes, over a period of time, maybe the next 3 to 5 years, 7 years, things could change wherein we could become more of price setters rather than price followers.